just give us a sense of where we are on this proposal and what we should expect, because there's a sense that the central bank obviously has been intervening in the market, trying to stimulate lending to infrastructure and, of course, to SMEs. But there's a sense that traction in that regard is somewhat slow. Give us a sense of what has happened so far on this.
Okay. Thank you very much. I think, first of all, the CBN has been extremely active, not on its own, but working with a lot of other banks, especially the PENCOM, regards to the Bankers Committee. So there's been a lot of work on that front. Secondly, I think what we need to realize is, with regards to the pension fund investments in infrastructure assets, first of all, a number of issues with regards to the assets which they're targeting, in terms of unlocking the restrictions, making sure that pension funds are not too restricted in terms of where they can actually invest their money. If we go to some other markets, for example, in Saudi Arabia, for example, to the extent there is government ownership in a project, then that project will actually qualify for pension fund investments. In a number of other markets, pension funds can actually invest either directly, providing debt and or equity, which is what we're seeing in a number of European and South American countries at the moment.
All right. Okay, so give us a sense of what model you think works best for Nigeria. You've obviously mentioned a few examples, Saudi Arabia, and etc. Give us a sense of what you think is the best way forward in the Nigerian case, given our peculiarities.
Well, I think given where we are, the best thing for us to do is to look at models that have worked best in developing economies. And rather than look at the UK or what the Dutch have done or what has been done in South America, I would like to go back to the Saudi example, where in fact what actually gave pensioners much comfort was where the government identified that there was a transaction, an infrastructure transaction. They actually had an equity stake in the SPV. Over and above that, the government also provided some form of guaranteed protection, whereby the pensioners would actually, the pension fund would actually get their money back. So using that case in Nigeria, for example, I think a good starting point would be, to the extent the box is ticked, the government has some ownership stake in the SPV, that would give comfort for the pension funds to want to invest their money, and the underlying guarantees that provides the return back to equity and the lenders.
All right. Talk to us a bit about what else can be done to, beyond the pension fund assets, obviously, that are available. We have 2 trillion naira in pension fund assets that are available. What other things can we do in this market to get money to these critical sectors like agriculture? Obviously, we have a huge infrastructure gap in Nigeria. The power sector needs a lot of money. But the banks seem to be shying away from lending, generally speaking, in Nigeria right now. Credit has not grown over the last 1 year significantly. Give us a sense of what models we can tweak with in Nigeria to make this work.
I think in the Nigerian context, and again, your question was sector specific, whether agriculture or transport. Again, I would like to pick examples from other models that have actually worked. In a number of jurisdictions, what the government has actually done is set up specific specialist banks, either an agricultural bank that focuses on providing schemes to the agricultural sector, banks that actually focus on providing credit facilities to the industrial sector, and also banks that specialize in providing lending to the infrastructure sector. So you have banks that actually focus on specific sectors of the economy, and they have schemes. So over and above the amount which they lend, they also provide guarantees to the lending to the borrowers, and that in itself helps to unlock and promote credit and stimulate credit in these different pockets of the economy.
Right.
Because what you normally have is a traditional commercial bank. They could either be sector specific, or they might not actually focus on certain sectors. And the best way to make sure that you capture the entire spectrum of the various sectors is to make sure that you set up specialist banks that target these areas, so no area is actually left out. And I think that's one model which we can actually adopt in Nigeria.
Maybe on final point, can you just give us a sense of perhaps notable transactions that are in the pipeline in Nigeria right now? Obviously, there's a huge infrastructure gap. We know about the Lekki Expressway transaction, which seems to be gradually coming to an end now. Give us a sense of what else is happening in the market.
Well, the infrastructure pipeline in Nigeria is extremely very huge. There are a number of projects on the drawing board, and there are quite a few others that have actually moved into sort of implementation in terms of the structuring element. First of all, as we all know, the Lagos state government is proceeding aggressively with the train, the railway transaction, which is going to run from Okokomaiko all the way to Marina, where there's still discussions being held with the preferred bidder, and substantial progress is being made on that front. Secondly, again, in Lagos State, there are plans to build a new airport in Lekki. So as far as infrastructure is concerned, over the next couple of years, we'll see a substantial increase in deals actually moving towards financial close, and some of those which will come to fruition in terms of project completion.